Moving Iron Podcast is proud to be part of the Global Ag Network. The network is live, so check out globalagnetwork.com for more details and updates. Now on to the show.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast, Tax Moves with Glen Birnbaum, now part of the Global Ag Network. Glenn, how you doing today, bud?
Pretty good, KC.
I'm super jacked. My favorite time of the year, tax season's here. I can't get enough of it, and I wish it lasted longer.
Yeah, you've had your stuff in for like 2 months.
Actually, they got my stuff in on December 28th. I was way ahead of the game, so I'm good to go. Good. I wait, and I just keep sending it to them as I need it.
Yeah, that's what we like. Yeah,
I freaking hate tax season. I know you as an accountant, this is probably your game time, baby, time to get after it. But for most people, tax season is pretty painful. So we are about 3 weeks out. So there's a few things that people probably need to remember about doing their taxes. For example, I sent my stuff off to my tax guy the other day, and I just kind of blindly put stuff through the scanner and send it to him. And my state income tax was in there from last year. My state income tax was in there. So with the new tax regulations, that's no longer deductible. So talk about some stuff people need to be paying attention to, and some stuff that may or may not even count anymore.
Yeah. So to start it off, talking about the state and local taxes, this people, acronym, the SALT tax. So it's never easy, but basically now we have a higher standard deduction of $24,000. So, and you're limited on your state and local taxes to only 10,000 of that number. So, if you have 15,000 of state and local taxes, you're only able to deduct 10. But in reality, your total state and local taxes, your donations, your mortgage interest on your home, those have got to be over $24,000. So kind of what you're saying is if that's not over $24,000, then you could look at it like, really, I'm not actually deducting my state and local taxes.
Right. Right.
And that's really the right way to look at it. So we're definitely seeing more and more of our clients, that for sure last year always itemized, because of primarily real estate taxes or state income taxes, right? Now a lot more of them are not itemizing. They're taking the standard deduction, which, does simplify the tax return to some degree, right? You don't really have to have all those donation receipts, and things if you know that you're a long way away from the 24,000. So again, it's your state and local income taxes capped at 10,000. So if you think really, then I have to have $14,000, right, of mortgage interest and donation. That's kind of a way to kind of look at it. So if you don't have that, particularly if you don't have, say a mortgage on your house or something, if you're older, say, then you may not actually be itemizing anymore. We're seeing more and more of that. So along with that, this is tax moves here, Case. We want to talk about moves we can make, right? And we've talked about this before, but one of the moves you can make if you're a retired person and you're taking what's known as required minimum distributions out of your, retirement accounts. It's a mandated thing that you got to start pulling a little bit out of those accounts once you reach age 70 and a half. What you can do is actually directly donate that required minimum distribution to a charity. So I was just talking to a guy last night, and he took his distribution amount that he had and he split it up amongst 5 different organizations and directly donated it. So just be aware of that thing that you definitely can do, because otherwise, if he'd have just donated the $5,000 in cash, say, he wouldn't have actually got a tax deduction. So here, by donating it directly to charity, you don't have to report the income. Okay.
Yeah.
Now, make sure you tell your tax preparer if you did this, because we receive what's called this 1099-R. We get it from our client here, right? And nowhere on that 1099-R is it going to say, hey, you directly donated this to charity. There's not a code. It's going to say, hey, it's taxable. So, but if you tell your tax preparer, hey, I did this, then they will, in the system, they can, kind of fix it and make it so that it's not taxable. So that's a key thing that I expect even more people will do as they, review the tax return and realize, hey, I'm not actually benefiting from donations.
Yeah.
So
okay, so if we've talked about this before too, but this is one of my favorite loopholes in this whole thing we've talked about. So I'm a farmer and I go to a church auction, church charity, or local community charity of something or whatever else, and I want to donate $10,000. Well,
yeah.
kind of where we're at now with the stuff, that $10,000 may or may not even affect the way my tax situation happens. So, what are some ways around getting that same $10,000 in there, but what's the way around that?
So this is another good reminder, Casey. Thanks for bringing it up. It's that you basically, if you're a farmer and you're not itemizing and you're donating any sort of money, to a church, let's say, you really should just change it and do not write checks anymore. You're actually just going to donate the grain to the church. So, make sure the church understands how to do this. They should, but you basically are going to call up the elevator, right? And, say, hey, transfer this amount of grain over to the charity. Right now, it's not, you're not selling it on their behalf, right? You're just transferring the grain over to their account, and then on their own, the church can sell it. And so that in effect gives you a tax deduction, because you're not, you don't ever sell that grain. That grain never actually, rolls through if you're a sole proprietor, your Schedule F, you don't pay self-employment tax on it. So there's a lot of benefits. So if you're in that situation, then you really should strongly consider, always donating grain, to your nonprofit organizations.
I'm sure livestock would be the same way, right?
Correct.
Hogs or pigs or chickens or whatever it might be. Okay.
Yeah. So you get into those situations. Yeah.
Right
So that's, it's a new game. We are seeing a lot less itemized, but there are still some moves you can make to in effect still get, a deduction or not have to pay as much tax, which obviously is the goal. So
right on. Okay. So, is there a time frame involved in that? They have to do it within I can't do it immediately. So if I called them today and then donated to the church and they did it the same day, is there some kind of legal time frame there where they have to kind of sit on it for a minute?
Withheld it. There's nothing real specific out there. I think the key thing is you haven't actually already sold it, and you're not just saying, hey, of this 5,000 bushels that I sold today, take $1,000 worth and put it in the church's cash account. No, it's a separate cash account. So no strong, but obviously the other thing is you have to do it, you can't do it today and think you're going to get some sort of impact on your 2018 tax return, right?
Yeah, absolutely.
Do it in the prior year. Now, the one thing that is available, you can make a retirement plan contribution, say like what's called a SEP contribution. That's one of the few things that you actually can make that contribution up till April 15th, basically, the due date of the tax return. If I make this contribution, I can actually get a tax deduction. But in general, most things have to have been actually paid, right, by 12/31 of 18. So
right. Yep. Okay. So, any of the stuff that we've talked about in the past, as far as some of the clarifications on some of the different 199 stuff and some of the different stuff we've talked about, anything new on that front that's really going to blow people's minds?
Nothing to blow people's minds, Casey. But it's, we're expecting some guidance, but we still don't have the guidance, on the grain glitch fix, even proposed regulations. So a lot of what we're dealing with now is, dealing with how to handle our software. The software, is it doing things correctly, right? There's a lot of coding behind the scenes, and something that definitely is going to pay in the next few years as we get through this is to look at, and we've talked about this as well, but farm income averaging. The software always computes farm income averaging to an optimal level. And if you remember, Casey, in simple terms, farm income averaging allows you to take 2018 income and kind of carry it back into the previous 3 years. So I can put a third of it back into 2017, a third of it back into 2016, and a third of it back into 2015 and get it taxed at the rates in effect in those years. If that's beneficial, you can do it. If it's going to cost you money, you don't have to do it. So it's very much flexible. So our software, you might remember this, but the software basically assumes you're never going to make another dollar in your life when it optimizes things. So some of the things we're looking at with our farmers is, well, if we know there's, $1 million of grain carried over, right, and the farmer's nearing retirement, right, it's pretty much inevitable that they're going to have $1 million of taxable income over the next few years. So knowing that, should I elect to carry some income back, right, at maybe some lower tax rates, not an easy process, but the system, computers, they don't know, right, those details, that you've got $1 million of grain you're carrying over. So what we're looking to is probably thinking that tax rates are going to go up, right? Not 100% sure, but they may go back up. Certain things are going to get, automatically sunset. And so we're looking at possibly saying, well, maybe 2022, there's a decent chance tax rates are going to go up. Now, I don't know exactly for who, right? It might only be certain people that are over certain income levels. But if you've got $1 million of grain you're carried over, right, you might be one of those people, right? Even though it's built up over 30 years or 40 years, right, that $1 million. But unfortunately, if you sell it all in 1 year, right, you're now $1 million taxpayer. So we're looking at, okay, if 2022 rates might go up, then if we have farm income averaging in 2022, we can carry, a third of it back to 2021, a third of it back to 2020, and a third of it back to 2019. And guess what? We're in tax year 2019. So 2019, I think, is a key year to think about how much income do we want to report, because we do have relatively low brackets right now in these years. And so it may be time for, if somebody's nearing retirement, to start, picking up some of that income, gradually selling that income. But again, the computer software is only going to give you a part of the story. Make sure you have a discussion with your tax preparer about this, and just evaluate your options. But this could really, for 2019, 2020, and 2021, we're pretty sure that rates are going to be similar. They're going to be relatively low. They're going to be wider. And this is maybe our best 3 years to recognize income. You still got to be comfortable writing the check, right, to the IRS, because it's going to be a higher tax bill. But this may be the time to accelerate some income if you're nearing retirement. So,
yeah. I don't think anybody's ever comfortable writing a check to the IRS, Glenn. So I think that's regardless if it's $1 or $100 million, it's still it's fucking hated.
It's not pleasant, and hope maybe you can fund your retirement plan more significantly, right? Things of that nature. There's some things you can do, but it's kind of inevitable. If you've got that much grain you've carried over all these years, you've built up that grain, right? Mm-hmm. Now you got to deal with it. So it's nice to have the farm income averaging in place, because it does give you some options later on, right, to use hindsight and say, well, you know what, now I am going to carry this income back, because I do think 33% is a cheap bracket, or 20, whatever the rate might be. It gives you some options. So farmers should rest easier than most taxpayers, because you have that ability to kind of go back in time and fix things. So,
yeah. So with that same kind of mindset there, on that same topic, price of grain is creeping up. A lot of folks are talking about some pretty decent moves here by harvest, corn harvest especially. To that point, guys have had stockpiles of corn and wheat and beans and everything else. They've kind of piled up. I mean, is there a silver bullet out there that can kind of help ease some of that along and kind of help you get through that? Because, I mean, there's just going to be a glut on some guys' places that they're just going to have to either bite the bullet or just continually just kind of sell it off as they can. So is there really a silver bullet that they can kind of work that a little bit to ease some of that pain?
No, I mean, I don't think there is a silver bullet. I mean, we've talked about trying to defer it, trying to put it into retirement plan contribution or spread it out. But, actually selling the grain is a decision, right? What price they're going to sell it at. Whether you take the money in 2019 or whether you elect to take the money in January of 2020, right, which may have cash flow implications, right? Those are two different things, right? For tax purposes, you pick it up when you actually receive the cash. And if you remember, if you sell it for fall delivery, right, fall here of 2019, you can elect to, I'm going to elect to get it, I'll take my check in January of 2020, right? Now we could be talking in February of 2020 and say, you know what, I'm going to go ahead and push that January of 2020 income back into 19. So I think it's just flexibility is more what's nice for tax purposes, flexibility. But if you like the price, I definitely, would sell, as opposed to saying, well, I don't want to pay the tax, right? Because there are ways to spread it out, do some other things, right? I mean, obviously you can always buy some equipment or whatever if you have those needs, right, to be able to offset that.
Great plan, Glenn.
Obviously, Casey didn't tell me to say that, but So yeah, it's the taxes are, they're almost too flexible. There's so many different ways with depreciation, with, the January grain, with farm income averaging, right? There's so many things we can do to move income around. And maybe does it take our eye off the ball of, should we be selling, right? Is this the right price? So, so I never let, tax drive the boat here. So.
Right on. All right, Glenn. Well, I'm sure you've got a few things to do today, just depending on, with it being tax season and all, I'm sure you've got just a slight full schedule. So I'll let you get back to it. So Glenn, if folks want to reach out to you and ask you a tax question or pick your brain about some possible angle they might be working, how would they do that?
Yeah, it's best to call me here at the office, Arnold Banwart. Our phone number, 309-694-4251. Be happy to talk to anybody just to, lend an ear. It's always good to have that conversation, maybe make sure we understand the facts, because there may be a couple other angles that we're not even thinking about, individually. But if we can talk, right, we can put our heads together. So that's the best way to reach out to me. You can also follow me on Twitter at Glen Birnbaum.
Yep, make sure you guys follow him on Twitter. He's got a lot of whenever he posts something, there's a whole gaggle of other accountants that jump in there and feed to the conversation. So there's a lot of good back and forth there. So Glenn, have a good rest of this week. We'll talk to you again next week, buddy.
All right. Thanks, Casey.
Thanks for listening to this edition of the Moving Iron Podcast, now part of the Global Ag Network. If you'd like to continue any of these conversations, you can hit me up on Facebook, Twitter, or Instagram at Moving Iron LLC. You can also send me an email at movingironpodcast@movingironpodcast.com. You can also visit the Moving Iron Podcast YouTube channel and watch Market Roundup with Chip Dellinger, Sean Hackett, and Angie Setzer. Also, Tax News with Glen Birnbaum. Please visit movingironllc.com. Here you can find information, details, and updates for the 2019 Moving Iron Summit in Nashville, Tennessee. If you'd like to support the podcast, you can leave a review and subscribe at iTunes, Google Play, Stitcher Radio, TuneIn Radio, SoundCloud, and globalagnetwork.com. So until next time, let's go move some iron. This is Casey Seymour. Out.
Moving iron in the 21st century.